Mortgages can cause a lot of questions to surface. An estimated 2.2 million are expected to be up for renewal over the next while. But will interest rates go down, or are rates just evening out now? With more is mortgage broker Angela Calla, who joins us. Thanks for being here.
My pleasure. Good morning.
Now, there's a lot of mortgages coming due in the next couple of years. 2.2 million?
Yes, from now until 2026. So 80% of people will experience a mortgage renewal. So it's very important. Make sure that you put in your calendar 120 days prior to your renewal. You can start shopping, and don't be afraid to make a switch. There are dozens and dozens of lenders that are accessible through accredited mortgage professional to open up your options, especially when it comes to the terms of your mortgage. There are options for up to 40 years for mortgages, and if you want to be able to take advantage of decreasing rates, the most important thing will be if you wanted to take a adjustable rate mortgage. There's actually two types. There's an adjustable rate, which when the rates come down, your payment will go down to improve your cash flow. Or there's a variable rate mortgage, which won't change your payment, but it will change the amortization. Okay. So you really want to be cautious about that. And then if you decide to lock into a fixed rate, you want to see if you qualify for a mortgage with what's called a monoline lender, because they don't have the high posted rates of the banks. And so if you want to make a change, like back in 2008 when we saw interest rates almost where they are today, and they went down very quickly to 3.75 for a fixed, you heard a lot of people talking about, oh my goodness, my penalty is so large, and how am I going to do this? But Canadians have so many options with a mortgage broker that they can get a monoline lender, and on a $500,000 mortgage, it can be the penalty difference of $19,000, Jennifer.
That's a lot.
Significant, right?
Yeah, that is a lot.
Yes, but also the most important thing with your renewal, and I hope everyone's listening right now, the biggest opportunity Canadians can take advantage of is getting rid of their outside debt. So just last week, we had a firefighter and a teacher come to us. They were up for renewal, got introduced to us from their sister, and they thought that the mortgage was just about getting the mortgage rate. And when we looked at their financial plan, what we realized is that, like 7 out of 10 Canadians, they had $60,000 worth of debt outside their mortgage, which is just a student loan, a car loan, credit card, and line of credit. Well, that was costing them $1,500 a month outside of their mortgage. Oh. So we were able to consolidate that into a new mortgage, saving them $1,200 each and every month. And with their 2 little girls needing to move up the property ladder, that will also help them qualify now for an extra $200,000 for when they do decide to move up the property ladder. And they can just save the money, have an emergency fund, invest in RESPs to build and protect their wealth further. So Canadians have nothing but options.
They just have to know where to look for them.
Right. And, you know, when you use an accredited mortgage professional, the service is free, and it protects your credit, and it gives you access to all these lenders, but with no sales aspect, because you get unbiased advice, the power of choice, so you can make a decision. And the best part of it all is that it's free. And if staying with your bank or existing lender is in your best interest, then you'll get that verified, have a huge breath of relief. But if there is an opportunity, like the family that we helped last week save $1,200, then that'll be brought to your attention, and you'll get those savings. So, you know, don't be fearful of your mortgage renewal. Step right into it, reach out to us, and let's see what we can do.
What do they need to get together before they approach a mortgage lender? What should they be aware of?
It's very easy. What you do is you just reach out, and then be prepared to provide income verification documents and credit verification, and talk about all your assets and so forth, and then they can put together the best plan. So it's very easy.
Prime Minister Trudeau was talking a little bit about some mortgage changes and the housing initiatives that he's looking at, bringing back 30-year mortgages. Is that something that would be of benefit?
I think that will be helpful. You know, as an association, we've been really working, Mortgage Professionals Canada, we've been working to talk about things like extending amortizations, doing different triggers for the stress test. Again, if we look back, you know, with the 20 years that I've been doing this, I just always reference 2008 because it was the most similar in terms of interest rates. And, you know, we had 40-year mortgages before. But then when rates got reduced, we then reduced those amortizations. So, you know, mortgage rates and terms will always change. And so the underlying concept is always have the best mortgage strategy, so you can modify your mortgage for the market and for your lifestyle. And when you utilize a mortgage professional, you have access to all of that without bias. So I would think that 30-year mortgages are available on a conventional basis for those who already have equity. So bringing back 30 years would be a good option moving forward.
For some, at least.
For
Right?
some, yeah.
All right. If you would like more information, Angela also has her book, The Mortgage Code, and the money is donated.
Yes, this
for a
year,
good cause.
Yeah, this year is the Tri-City Moms Group, and every year a different charity receives the funds.
Fantastic. Thank you so much, Angela.